Imagine trying to swim against a powerful river. You can do it, but it requires enormous effort. Now imagine swimming with the current. Everything becomes easier. The stock market works the same way. One of the biggest reasons beginners lose money is simple. They fight the trend. They buy falling stocks. They short rising stocks. They try to predict reversals instead of understanding what is actually happening. Professional traders know something different. The trend is not everything, but ignoring it can be extremely expensive. Today, you're going to learn trend analysis. By the end of this lesson, you'll understand how professionals identify market direction and why trend analysis is often the foundation of successful trading. Let's begin. A trend is simply the general direction of the market, nothing more, nothing less. Many beginners overcomplicate this concept. A trend answers one question: which side currently has more control, the buyers or the sellers? Every market is usually doing one of three things: moving up, moving down, or moving sideways. That's it. Almost every chart on Earth can be placed into those categories. Let's start with an uptrend. An uptrend occurs when buyers are consistently stronger than sellers. But how do we identify it? Look for two things: higher highs and higher lows. This is the heartbeat of a growing market. Imagine a stock rises from 50 to 60, then pulls back to 55, then rises to 70. Notice what happened. The highs became higher, the lows became higher. Each step is slightly higher than the previous one. The stock advances, pauses, and advances again. Professional traders understand this. Beginners often panic during normal pullbacks. Professionals recognize that pullbacks are part of healthy trends. They use these moments as opportunities, not as reasons to flee. It is about structural integrity. Now let's discuss downtrends. A downtrend occurs when sellers control the market. The structure is the opposite: lower highs and lower lows. Imagine a stock falls from 100 to 90, then rebounds to 95, then falls to 80. Sellers remain in control. Many beginners make a dangerous mistake here. They believe a stock is cheap simply because it has fallen. But price alone does not create value. A stock can always fall further. Professional traders respect the trend. They don't argue with reality. Now let's talk about sideways markets. Sometimes buyers and sellers are equally strong. Price moves back and forth inside a range. This frustrates many traders, but it also creates opportunities. It is a battle of attrition. Think of a boxing match. Neither fighter dominates. Eventually, one side wins. And when that happens, a powerful